Grace and peace, everybody. I pray that you all are enjoying your week. I want to welcome you to another Tuesday Night Ignite as we kick off in a very important month, a very important awareness month for us. As you all come in very quickly, I want to give you a few moments to kind of activate and engage. Go ahead and like and share. Our Saints, Greater Church Columbia, you know, this is our Bible study night. So I at least expect our congregation to be on. So as you come in, say hello. I want to make sure that I speak to you. We have a couple of guests tonight that are going to be sharing with us and empowering us and giving us some very important and pertinent information. And I want to make sure that we are as empowered as possible, so that you come on in, say hello, and greet us in Jesus' name tonight. Before we go on, I always ask you, please make sure you can hear me. Hey, Chris, happy belated birthday to you. I pray that you enjoyed your birthday. I pray you did. I pray you did. Go ahead and tag the Saints, you all members. If you see the Saints missing, go ahead and add those names into the comments, so that we can make sure everyone is here. God bless you. God bless you. God bless you. I'll just give you all a couple moments. Grace and peace, everybody. I see you all coming in. Go ahead and like and share. And we are kicking off our Awareness Month series. You all, the month of October has a lot of significant awareness issues, and even though the month of September is kind of set aside for life insurance, tonight I want to start this conversation off, this Awareness Month off, with speaking about the necessity, the importance, and the value and the benefits of having an active life insurance policy and a good relationship with a life insurance agent. So that's what we're going to be speaking to tonight. As you know, that's not my area of expertise. So I've asked for some help, the best help I could find. So as you Ashley, it's not you. The internet has been acting funny at the church for the past hour or so. But I'm here. Evening, Saints. Tommy Brown, I see you. Vicky Glover, I see you. Bless you. I pray that you all are doing well. Thank you all so much for being on. I see you, Saints. I see you. I see you. I see you. Ashley, I'm here. I'll never leave you nor forsake you. All right, no sound. What about now, Christina? I thought you ain't. Saints, please, we have guests tonight. Bless you, Vicky. I love you so much. Naomi, I see you. So tonight we are kicking off our Awareness Month, and we're going to be speaking to the necessity, the benefits of having an active life insurance policy and the benefits of it, and building relationship with insurance agents. And tonight I have two phenomenal people who I'm going to allow them to introduce themselves tonight, because they are going to kind of guide and give guidance to our discourse tonight. Listen, if you all have questions, I'll be watching the comment section. So if you all have questions tonight, make sure you put that question in the comments section. Questions specifically to them or what they're doing. God bless you. Grace and peace, First Lady Grant. Love you so much. If you all have questions, I'll be able to watch the questions and make sure we kind of give attention to those as we go forth tonight. Okay. Tonight, allow me to introduce you all. Listen to the first time ever on Facebook Live, none other than Miss Siobhan Jenkins and
Hello, hello.
the VP himself. The VP himself, y'all. That she calls him Coach. But either way, I'm going to allow both of these phenomenal people to introduce themselves and to give us the opportunity to get to know them before we get into our discourse and and make sure that we are on the same page. There we go. I want to make sure I had you on, VP. All right. So
Yes, yes.
I'll start with you, Siobhan. You can give an introduction of yourself, and then MVP. I see you, man. I see you, and then we can go. And then we can go forward. Okay. So come on, tell everybody hi, Siobhan.
All right, good evening, everyone. I am Siobhan Jenkins, originally from Beaufort County, living in Columbia for a very long time now. Um, I am an educator. I love educating people. I do teach little people, but I do love educating adults as well. And today we're going to give you a plethora of information that's going to be very useful to you and hopefully your family and friends that you're going to meet. So I am excited about what we're about to do here tonight. Ezel Parker.
Yes, yes. Thank you so much, Siobhan, and thank you so much, Pastor, for allowing us to speak to your congregation and friends. My name is Ezel Parker II, and I've actually been in the financial service business for 20 years. I got started when I was in college at the University of South Carolina, and my mom introduced me to it. I went to high school in a place called Harleyville, South Carolina, and then came to Columbia to school, decided to stay. I joined Brooklyn Baptist Church with Pastor Jackson. And, now I'm blessed to have 3 offices as we teach the community about basic principles on building wealth when it comes to financial literacy and economic empowerment. So we're really excited about being on tonight to give you all some key information on what we feel needs to happen to help people speed up their process to, build wealth. So Siobhan, I'll turn it back over to you.
All right. Guys, again, thank you for Pastor Talbert for inviting me. To everybody out there, I've known Pastor Talbert for a very long time. We went to college together. And so he is a very good friend. And I'm just glad that he has allowed me the time to share this great information with you guys. So we're going to go ahead and we're going to get started tonight, guys. We're going to talk about just some financial literacy. I am very passionate about making sure that people are aware of what's out there for them, what they can do, what choices that they have, and just basically helping the people in the community where I am with some things that they might not be aware of. So as we go through tonight, I want you to kind of take a look at yourself and say, hey, is this something that I could use? Maybe I have a friend that can use this, or maybe this is something that I just need to dig a little deeper into. Take another thought about it. All right. So Barry, I'm ready for that first slide. And again, if you have questions, you can just text it to Barry or send it. One second.
And Siobhan, I do apologize, but the slide is not coming up. You all, she is prepared, but for some reason, I'm not able to pull this slide up for her.
It's a PowerPoint. Does that make a difference?
And I apologize. And I'm not sure exactly what's going on with this good spectrum. But it's not even allowing me to open up this Gmail that you sent it to me in.
No problem.
And I'm not sure why.
All right, so just give me 1 second here. Let me.
But if you start working, I'll figure it out.
All right, so here we go. All right, guys. So
Yep.
All right. I
It is.
work with a
It's coming.
company.
If you give me a moment, because I think the Wi-Fi, I went ahead and restarted it, so it
Okay.
should be coming through. So just give me a moment,
Okay.
and then I'll be able to pull it up.
No problem. No problem. And as Pastor Talbot just said, last month was Life Insurance Awareness Month. And tonight, what I want to do is I want to be able to, again, give you tools necessary to put in your tool belt, maybe something that you could use. And again, my job is to educate the community, let people know what's out there, what you can do, how it can benefit you and your family, and basically how we can make a move if you need to make a move. Barry, I'm not sure if the lag is still happening, but just I'm still here. Let's see.
Yeah, you're good.
Okay.
Yeah. Siobhan, you're good. I'm the only person that's lagging,
Okay.
so you can
Okay.
keep going. I muted myself so you wouldn't hear me
Okay.
clicking on the laptop to pull up
Are we gonna be able to pull
your.
up, or you just want me to go ahead?
Okay, let me try to share my
Just go
screen. Y'all
ahead.
want me to try to share
You
my
can
screen?
you can, Coach. If
I shared it just now, but I don't know if you saw anything or if you can see it from our angle or if they can just see it. So I'm sharing it now. Tell me if you see anything different on the screen. Do y'all see anything on the presentation, the slide up?
I
Siobhan?
don't. No, I don't.
Pastor, do you
But
see
again,
anything? I'm not sure if everybody else is seeing it.
I got it.
you
Got it.
got it.
Okay.
And then
I have it. I have it.
all right. So I can go ahead.
Yes, sir.
All right. So on the screen, on the slide, you should have it's a pinwheel, Barry,
I'm
with all
gonna
the
put it up
companies
in a
on it.
second. I'm gonna make it the full screen.
Okay. All right. So I work with a company called
Go
Primerica,
ahead,
and our
Siobhan.
mission, our mission, our mission is to help families earn extra income, become properly protected, debt-free, and financially independent. All right. So everything that you see on the screen are all the companies that we partner with. Everything on the right-hand side helps to build your wealth with investments and annuities. Everything on the left-hand side helps to protect what you currently have, protecting your
Just go
life
ahead
with
and
life
talk through it.
insurance.
No, I'll add it for you.
Say it again.
So he said, just go ahead and talk through it and he'll add it to it. You can go ahead, Siobhan.
Okay. Okay. So everything on the left-hand side helps protect what you currently have. Life insurance is one thing that is major. We also have Vivint Smart Home Security, We need that. We have identity theft. We have all those things. So what happens is Primerica, again, partners with all these companies, and they offer the best of what they have to the community. Okay, Primerica has been in business for a very, very long time, and the focus is to help middle income families have the same financial opportunities as others. All right. So on this page that you see, there are lots of companies, and each company offers the best of what they have to help you. Okay, to help the community. And so what I do is I work with clients, get them what they need, customize what they need, and I'm able to assist them in that way. So if you need life insurance, I'm able to help you with that. If you need Vivint home security. I'm able to help you with that. If you're looking into building some finances for the future, I'm able to assist with those things as well. So again, kind of think of Primerica as a Walmart where you can get your car service, buy groceries, you can get everything that you need at a one-stop shop. And that's what Primerica does. It's a one-stop shop so that you can get all these financial things that you need basically to help your family become financially independent, become properly protected and debt-free. All right, Barry, let me know when you can go to the next slide. If you can give me a thumbs up, are you ready? All right, so I'm gonna just go ahead. The next thing I want to talk to you about is savings, okay? Everyone on here most likely has a bank account, okay? And what happens is your bank has an interest rate for your account. So the first thing I want to talk about is the rule of 72. A lot of people are not aware of the rule of 72 because it's not something that they teach us in school. It's not something that we learn.
It's taking me a minute, but you go ahead and go. You're doing an amazing job. Keep on moving.
It's not something that they learn at school unless you're going to a financial school or, something like that. So here, let me explain to you what the rule of 72 is. Basically, it lets you know how long it's going to take for your money to double based on an account that you have it in. And I know I was taught to, go to school, get a good job, make extra money, put it in the bank, put it all in the bank, get 2 accounts, get 3 accounts, get 4 accounts, okay? But I'm putting my money there, but is it really helping to double my money quickly? Is it helping to build my money? So let's just say for easy math, we do the rule of 72 and our account interest rate is 1%. Let's divide it into 72. It's going to take our money 72 years before it actually doubles. Now, I know everybody on here is a spring chicken, but do you want to wait 72 years before your money doubles one time? Okay. That account is averaging at 1%. The next account I want to talk about averages on 6%. Okay. Your money in this account will double every 12 years. Okay. That seems to be a little bit better than 72 years. And I wish I could talk to you guys back and forth, but I know you're nodding your heads. Yes, 12 years is better than 72 years, right? That's your retirement accounts, things like that. There's also another account out there on the average interest rate is 12% over a 20-year period. And this is your global economy account. This money will be doubling every 6 years, okay? So just looking at the 72 years, 12 years, 6 years, which one would be better for you to have your money doubling in? The global economy account. Yes, you're right. The global economy account. So what I want you to know is that Primerica offers these accounts for as low as $25 a month. If you went to other financial institutions to get a global economy account, you would need a large sum of money, $10,000, $15,000 to do that. Most middle income families do not have $10,000 to $15,000 to open up such an account. So Primerica says, hey, let me help middle income families be great. And as long as they can have $25 a month, they can have the same opportunity as others who may have the bigger amount to put in these accounts. So this is where I want you to actually take a moment to think, hey, do I have what she's talking about? Do I need to get something started? Maybe you have a 1-year-old. And if you started that right now, in 6 years, that amount will have doubled. When the baby turns 6, another 6 years, that money will have doubled. Just think about how much you would have saved by the time that 1-year-old is 30, 35, 40, 45. And so think about how you can help, how your money can build faster through a different means. So I am here to just broaden your horizon about what's out there and what Primerica has to offer for something as low as $25 a month. And so that's how money works, okay? that's not all of it. We've got some more coming to you. And so I am going to go ahead and let my wonderful partner, friend, Regional Vice President, Ezel Parker, go ahead on to the next slide.
Okay, thank you, Siobhan. Really appreciate it. That was
welcome.
some valuable information. And what we noticed is that a lot of people in America have two challenges. If they live long, they want to make sure they have some money accumulated, to be able to build wealth. But then if they pass away suddenly before the money is accumulated, they want to make sure that they can preferably leave an inheritance for their children's children. So Siobhan talked about how we teach people to be able to accumulate money. Now we're going to talk about, if something happens suddenly, how to protect, in our opinion, the most important thing that comes out of the house when a loved one passes away, which is the income. So we talk about income protection. A lot of people may know it as life insurance, but we really want to teach people how not to just buy insurance for burial, but to make sure if something happens, they can be able to make sure that not only is the debt paid off, not only is the funeral paid off, not only is the kid's college education is paid off, but the monthly income that comes out of the house can be replaced. So the lifestyle that the loved ones that are being left behind can at least remain the same or go up. And so we show people how to do that pretty much on an average for less than what they spend on a cell phone bill. But most people just have no clue about it. So one of the things, Siobhan, that's happening is a lot of people are relying on companies and entities to take care of their family when they look at their benefits, having insurance on the job, life insurance on the job and investments on the job. And that's okay, but think about who controls those benefits. If you leave the job, a lot of times you have to leave the benefits. Sometimes you can take them, but a lot of times they change because you're no longer part of the group. And so we would want to teach people how to not rely on the job to take care of the family. They need to have coverage and investing and things of that nature outside to be able to complement it and let the outside stuff be the primary stuff and then their job be the secondary stuff. So once people make a decision that I need to have life insurance coverage away from my job and investments, there are two ways you can go. You have a concept called whole life insurance, different names. You have, universal life, variable life, adjustable life. Any kind of life insurance that builds up a savings is a form of whole life because you pay for two components in that program. You pay for the life insurance coverage and you pay for the savings that's attached to it called cash value. Then the other type of life insurance that you can get is called term insurance. And term is just for periods of years. You can get 10-year intervals, 20-year intervals, 30-year intervals. Our company gives 35-year intervals based on your age. And so that's just pure protection. All you're buying is just pure life insurance protection. So you can get way more coverage for way less money. So let me give you some numbers to be able to see. It looks like something is coming up now. I think, Siobhan, can you still hear me?
I can still hear you, Coach. My screen is black.
Okay.
It's buffering.
Okay. So what we'll do is we keep talking. And so with the whole life insurance, let me give you some numbers. Let's say that we have a couple by the name of John and Mary. They're in their 30s and they got $75,000 of coverage of whole life on each one of them. And they pay about $130 a month for that plan. $75,000 for $130. Well, when they send that $130 in, the company cuts it in half, and about half of the money pays for the life insurance protection, and the other half goes inside the policy every month to build up that cash value. So if you look at it, I see it on now. Yep. Mm-hmm. So John and Mary on your left-hand side, they have $75,000 coverage each, and they're paying $130 a month for that. Well, half of that money pays with insurance, about $65. The other $65 goes inside of the cash value.
Yeah, I'm doing that. I'm finally getting the stuff up.
Yep, we see it, man. Thank you so much. Appreciate it. And so now that means every month they pay for two components, the life insurance as well as the savings. So if they keep doing that every month, the savings is going to grow. Let's make believe it's been 10 years and they built up $5,000 inside of that cash value, you all. The company now allowed you to get credit for the $5,000, but if John passed away, Mary would get a check for $75,000. But all of the money inside the savings, did you know that the company keeps that? So you're paying for both benefits, but you're only able to get either or on an average based on what happens. So Mary should get a check for $80,000 because he paid for that for the last 10, 15, 20 years. But instead she gets 75,000, and now the company keeps the 5,000. That's not fair. You know, post in the chat if y'all feel like that's not good, to pay for two things to get one, if you don't mind. They're paying for two benefits, but unfortunately they're only going to get one. So let's say that, you know, John finds this out. So he said, let me take all my savings out before I die. By law, if he writes the company, says, let me get my money out, my savings, out my cash value, the company can send it to him. So they send him a check for $5,000. Once he gets all of the savings, now the company cancels the life insurance policy. That's called cashing in your policy. Some of y'all may have heard that from our parents or grandparents. And that means you take all of the savings out and it surrenders the value of the life insurance. Again, that's not fair if you're paying for both every month. So how's if I die, I lose my savings, but if I get all my savings, I lose my coverage? And last but not least, he says, then let me get a portion of my savings out, leave some in so the policy can still stay the same, can still be active. So he decides to take 4,000 of the 5,000 out, leaving 1,000 in. That's legal. The company will allow him to do that. But they now treat that withdrawal as a policy loan, which means he had to borrow the money from the life insurance policy, pay it back with interest. And if he doesn't pay the money back, the interest that he's supposed to be paying starts to eat down whatever he left in his cash value. And when the cash value goes to zero, that's when the policy is terminated. So all we're saying is don't bundle your life insurance and your savings together where they overcharge you for both. And if you mess with one, it affects the other. We believe in a concept called buy term and invest the difference. So now if you look at in America, people who have outside of the job life insurance, 85% of the people in America that have an outside of the job policy, they own whole life insurance. They don't know how it works. So we do a great job on educating them on how it works and how to enhance their plan. So we met with John and Mary and said, wait a minute, John and Mary, y'all are married, y'all have a mortgage, y'all have young children. 75,000 isn't enough to do all the things that I said earlier. So we need to give you way more coverage for way less money, because we want to show you how to get that for a period of time. If you're 35 years old, let's lock you in for a 35-year period to get you into your 70s. So we gave them $250,000 of coverage each for $80 because term has no savings. Locked them in for a 35-year period. And if they were paying $130, now they went to paying $80 and they had $75,000 of coverage. And now we gave them $250 each. That freed up $50. With the $50 difference, we're going to show them how to start a mutual fund, what Siobhan talked about, away from the life insurance, separate from the life insurance. So $80 is going to cover and to the insurance company to cover them if they passed away suddenly. And then the $50 is going into the mutual fund company to cover them if they live later. Run that plan for 35 years. And when they get into their 70s, their 5-year-old is now 40. Their 30-year mortgage is now paid. Their debt is lower and their money has grown. They've accumulated $278,000 saved in that mutual fund, not including their 401k or anything else they've been doing. So if their responsibilities have gone down 35 years later and their money has gone up, now at the end of the period for the life insurance, they don't have to renew the policy for the same amount of coverage because they wouldn't need a $250,000 life insurance policy in their 70s. They can lower the coverage down and continue coverage, or they can feel like, hey, I have enough money saved where now life insurance becomes a luxury versus a necessity because now I don't have to have life insurance to protect my situation because I'm self-insured because I have the actual money. Here's the benefit of keeping them separate. If you die along the way, your family gets both. They get a check from the insurance company and they get whatever is inside of the mutual fund. If they need to go inside the mutual fund to take money out, they don't have to borrow it. One doesn't affect the other, but we're using both to create the wealth builder game plan. So if you live, you're good. If you pass away, your family's good. So that's what we teach to show people how to set this up the proper way so that now you can build wealth. And if you want to, you can change your last name to Winfrey or Perry, because those type people aren't spending. You think now, Pastor, you know Oprah not spending no $150 a month to cover herself for $50,000, $75,000, $100,000 because she has the actual money. Mm-hmm. LeBron James, Bill Gates, Jay-Z, Beyonce, all these people who have money, they don't have to have life insurance for that purposes. So that's what we want to show people how to do on the simplest form to be a blessing, so we can stop seeing all these GoFundMe's and all these people come into the church to have the side conversation with the pastor about burying a loved one because they weren't properly protected or prepared, got, in the event of, unforeseen death. So turn it back over to you, Siobhan and Pastor. I don't know if we want to take some questions, but that's what we want to share tonight to help people understand how to invest and how to make sure that they're properly protected away from their job to get the right things. So appreciate your time.
And that's one of the reasons, because I'm sorry, I hit the wrong button, because you always hear people say GoFundMe is not life insurance. Stop doing these GoFundMes. I think I should be back. Can you see me now?
Yes, yes.
Okay. One of the reasons why I did is because people always make these comments. Pastors make the comments. You see leaders make the comment. I'm gonna do GoFundMe. Then what can I do?
Barry, I think we lost you.
We want to see if anybody have any questions that we need to discuss.
Okay.
And then
I think you was getting to that.
Yeah, contact you. So you can do one-on-ones.
Okay.
Anybody that may have an interest in more details or information.
Okay.
Email some brochures out too.
Hey, Barry, I think we lost you for a moment there.
Yeah, it was delayed again, and it has me going in and out. But one of the comments someone made was, and maybe you guys can give a little clarity to this, if this is what you were speaking to about portable coverage.
Yeah, portable coverage is when you can take your life insurance from your job when you leave your job. So that means it's portable, means that whether you're on the job or not, you can still take the coverage with you with the life insurance. One of the things that we just caution people on with that is when you're on the job, they give you a certain group rate because you're still a part of the 100, 200, 500, 1,000 employees, whatever, based on how big the company is. But when you now separate from service or from employment, now that gives the insurance company the right to be able to increase coverage because you're no longer part of that group to get that group rate. So you want to be kind of careful with that. Portable is not necessarily bad, but you got to make sure you know all of the details on how does that work. Will there be increases and et cetera,
And Barry, I just wanted to put out there, if you have people that want to contact me for a more in-depth, one-on-one, I'll be glad to take their name and number. I can be reached at SiobhanJenkins@yahoo.com. If it's in an email, if you've got someone who wants my number, I will be glad to contact them.
Awesome. One other question.
Mm-hmm.
Good. And I'm actually putting it into the comments right now, Siobhan.
Okay.
All right. Your email address is up there.
Okay. Thank you.
Okay.
Mm-hmm.
You said it was one more question, Siobhan?
I think he's asking it. Do you have one more question, Barry? I think it's the delay.
Okay. I is can I ask? All right. It, can you all hear me?
Yes, I can hear you.
Yes, sir. One more. Someone just posted it, and I want to ask it real quick. Yep.
So, Siobhan, you see that question?
That yes.
Yeah. So it
Is a
says it.
guaranteed issue option available for those that may have health issues?
Yeah, that's a great question. Life insurance is calculated on based on age and health, and so we do the underwriting process, and based on certain health conditions, can determine if it's going to be a guaranteed issue or not. All we do is we kind of meet with people on a one-on-one basis, find out what their situation is, and then based on experience, we can know, hey, can submit it, see if we can get it through. Certain things are kind of tough, but all in all, the underwriters decide based on the risk factors, and how long stuff has been. Are there multiple issues in that process to determine if they can cover, or people have to be kind of postponed for 6 months and then retry. So that's how that process works. Great question. I think that was Miss Vicky.
Okay. I think he's talking.
Okay. Awesome. Awesome. You all allow me to say thank you again so much, not just for the information, but your patience with the delay here this evening. Uh, I promise you, this is the first and worst, and of course, it's going to happen in moments like this. So please forgive me. But thank you so much for your time, attention, and patience. Siobhan, if you could give them your information one more time, your email address is up there. But if they can follow you on Facebook, if there is a phone number you want to give, or whatever the case, we just kind of just give a rundown again of your information, because if there are any questions, you all, if you need to get a policy, if you have more questions on what we spoke about tonight, not just about the insurance piece, but the wealth building, and just the other available options to give financial security, not just security, but even financial literacy for you, your household, your family, for your future decisions, and even to be a benefit and a blessing to your community and even your church. Then by all means, I want you all to reach out to Siobhan Jenkins. She lives right. She's not, across here in Columbia. She's a teacher, but she's also literally in my phone, even though I've known her for years, in my phone, her name is my insurance lady. But nonetheless, I want her to take a few moments just to kind of give us her contact information again, and so she can tell us how to reach her.
All right. Again, thank you all for having us this evening. If you would like to find out some more information, to kind of talk a little deeper in depth about your specific situation, you can reach me at Siobhan Jenkins. That's SHAVORN Jenkins at yahoo.com. If you are a member at Pastor Barry's church, Pastor Barry knows how to reach me with my phone number. And I do have other, if you need a brochure, if you want to share it with a friend, if you want to give Pastor Barry your email so I can send some information to you that way, either way is fine. But yes, there is a plethora of information. I'm not even trying to hold it. I am literally trying to give it away. So as many people as I can reach is that's my ministry, helping the people. I'm help. All right, Pastor Barry, back to you again. Thank you so much. Mr. Parker, I appreciate you. Thank you so much.
All right. Coach, any final words from you tonight?
Oh, no, sir, man. Thank you. We just really
All
appreciate
right.
your time. Yep. Thank you.
Much for your attention, your time tonight. I look forward to next week. We're going to be doing another one of these conversations with some community professionals, and we want you all to be as empowered. God, hey, cousin. um, as we want you all to be as empowered and as informed as possible. Okay, so this entire